Hello, everyone. Matt Clark, research analyst for Money Markets, here with your latest Bull and the Bear podcast. Now, before I get into this week's update, I do want to let you know that Chief Investment Strategist Adam O'Dell is holding a rare event where he'll share a strategy that he guarantees will make you 100% profits on the average every single month of a year. So just go to www.theinvestingsecret.com and find out more about this once-in-a-lifetime event. Now, on with today's podcast. We're in store for some pretty big changes in terms of policy across the country. With the new administration and Democrats controlling both the U.S. House and the U.S. Senate, albeit by the slimmest of margins, we expect to see dramatic shifts in policy from the previous administration. Now, I don't want to really get into the politics of it all, but we can't ignore the fact that politics does mix with the stock market. And I don't just mean when the Federal Reserve comes out and makes a monetary policy decision or talks about interest rates or anything like that. One thing investors like to do is to get out ahead of perceived trends. This is where politics kind of comes into play. For example, the day after Election Day 2020, cannabis stocks shot through the roof. The reason was because investors perceived the notion that because 5 states, including one in the Deep South, had approved legalizing cannabis either for adult use or medically, or in the case of South Dakota, both, the trend that it would be that cannabis stocks would increase in value. And they did. So it was a pretty accurate trend to get into. They shot up even more when results of the Georgia Senate runoff election gave Democrats control of both the U.S. House and the U.S. Senate, along with the White House. And that's because of the perceived notion that cannabis use could be federally decriminalized, giving cannabis stocks another huge boost. Now, I talk more about cannabis in the market in my weekly marijuana market update, which you can check out on our YouTube channel. But there's another political perception that's leading to another investing trend, and it's one like cannabis that's going to push stocks in a particular sector even higher. You see, one of the biggest platforms for Democrat Joe Biden was to infuse billions of dollars into clean energy in hopes of giving the United States a net zero carbon footprint by 2050. This means that the U.S. would not be producing any carbon emissions by the year 2050. So once he was elected president, stocks of clean energy companies started to rise in value. Now, today I want to share with you an exchange-traded fund that will diversify your holdings and give you solid exposure to this growing trend. But first, let's look at why this is a confirmed trend. So the U.S. Energy Information Administration projects renewable energy in the United States is going to nearly double over the next 30 years. That projection came even before Biden was elected president and Democrats gained control over both the House and the Senate. The country is expected to go from around 11 billion British thermal units, or BTUs, of renewable energy consumed to more than 20 billion BTUs by 2050. Now, that's a solid expansion. I suspect that could be even more once Democrats start discussing additional tax breaks for things like residential solar installation, large-scale wind farms, things like that. The bottom line is that in order to decrease the reliance on things like dirty coal and oil and nuclear power, the cost of renewable energy production and use has to drop. This is where tax breaks come into play. You may pay more upfront to put solar panels on your home, but you'll make that up in the cost of the tax breaks the federal government can provide by installing them. Now, the ETF I found holds major players in the renewable clean energy game, companies like Plug Power Incorporated, which is up more than 16% at the time I recorded this video. And it also holds a stock that Chief Investment Strategist Adam O'Dell recommended to his Green Zone Fortunes readers in July of 2020 that's up more than 137% since that recommendation. Now, the ETF I'm talking about is the SPDR S&P Kensho Clean Power ETF. Trades on the New York Stock Exchange under the ticker CNRG. Its underlying index is the S&P Kensho Clean Power Index. Now, since hitting a low of around $31 a share back in March of 2020, CNRG has jumped more than 323%. And I don't think it's done there. The ETF is issued by State Street Global Advisors and has around $290 million in assets under management. It has an average daily volume of around $5.1 million and comes with a relatively low 0.45% expense ratio. Now, additionally, CNRG has 40 holdings, just like the ones I recommended just a minute ago. Now, when I compared it to a similar ETF, the ALPS Clean Energy ETF, which trades on the BATS under ACES, I found that the two move in pretty close tandem with each other. However, CNRG has a 1-year return rate of 181.6% compared to ACE's return of 171.1%. It actually beats ACES for 1 month, 3 month, 6 month, and 1 year returns. Now, CNRG may be a little bit more expensive, but its returns are certainly stronger than their competitors. Now, what we'll see in the next couple of years is a huge shift by the U.S. government to incentivize clean energy. And that's going to be a boom for companies to provide goods and services in that sector. So to jump into this trend and realize those future gains, CNRG not only gives you that exposure, but it also gives you a basket of very diversified holdings. This ETF also comes with an annual dividend of around 75 cents per share, which isn't strong, but it's not that bad either. Now, in order to take advantage of this trend towards clean and renewable energy, you've got to act fast before the price rise limits those gains that you can see. Now, I want to make sure you check out our YouTube channel and just head over to YouTube. If you're listening to this on our podcast channel, you can search Money in Markets on YouTube and be sure you find the green bull and bear logo. Subscribe and you get notified each and every time a new video comes out. If you want to listen to the bull and the bear, you can do that on your favorite podcast syndicator as well. If you're watching this on YouTube, you can listen to us on Apple Podcasts, Google Podcasts, Spotify, even iHeartRadio, and Amazon. Make sure you subscribe and get alerted each and every time a new podcast is released. Also, make sure you leave us a review and a comment on any of these platforms. We certainly love the feedback. If you do have a question or a particular stock or sector that you'd like us to look at in the Bull and the Bear podcast, just email us at thebullandthebear@moneyandmarkets.com. We love to do that as well and see what your feedback is. And also, I'd be remiss if I didn't tell you, head over to moneyandmarkets.com, sign up for our free daily e-letter. In it, we give you safe and sound investment information each and every day from people like myself, Charles Sizemore, Adam O'Dell, and many others. You get it each and every day, Sunday to Saturday, and it is absolutely free. Now, coming up on Friday, Money Markets editor Charles Sizemore, as well as chief investment strategist Adam O'Dell will join me. We'll dive into a couple stocks, tell you whether they're ones you want to maybe buy, put in your portfolio, take a look at, put on a watch list, or ones you should just stay away from completely. We will let you know what those are and what you should do. Until then, this is Money Markets research analyst and host of The Bull and the Bear, Matt Clark, wishing you all safe trading.